Delving into SoFi current landscape, from market dynamics to analyst forecasts, let's decipher the trends together. Let's delve in. Welcome to Stock Analysis, your go-to destination for insightful market analysis and investment strategies. If you're ready to navigate the world of stocks with confidence, don't forget to hit that subscribe button. Today, I want to talk about SoFi. I want to discuss some current data points, understand what's happening today, and have a conversation about everything you need to know. Let's dive right in. SoFi is currently down 0.46%, but you'll understand from intraday movements that it's fluctuating quite a bit. We're entering the power hour now, so I hope the FOMO rally will pick up even more, because today was the trading day before their next earnings report, so it should be relatively good. A lot of attention is on SoFi today. So 45.3 million shares have been traded compared to the 46 million average. This morning the PC numbers came in slightly better than expected, which is causing many analysts to analyze currency declines. This gives us a good glimpse of what could happen for the rest of 2024. Today there hasn't been any news from SoFi, so we'll just have to wait and enjoy the ride. But the interesting thing is that one thing has emerged from analysts. I don't know why so many analyst ratings have started coming out before SoFi earnings. It seems a bit strange to me, but in the end, it's the old JP Morgan who has come forward. So take this with a grain of salt. But they're given a hold rating and a $10 price target. Relatively, this is slightly better than the average there. So here is the consensus. All analysts, maybe even bearish ones, have a consensus of $9.33, which in my opinion is approximately a 22% upside. I believe this is what SoFi should be right now, not just based on Monday earnings. So, regarding Monday earnings, it is hoped that profitability will be evident. They have repeatedly said this. So whatever the reason, whatever it may be, I think if they are not profitable, SoFi will be sold off quickly. But in my opinion, I don't think that's the case, and I've heard they've said it about 15 times by 2023. But forget that, you can see shorts are trying to increase and squeeze SoFi. Right now, 348,000 shares are being increased. 13.69% of the free flow has been shorted. A total of 122.54 million shares have been shorted, and the average cost is approximately 1.25%. I also estimate that by Friday after hours, you'll see this cost to borrow minimum decrease, so that people can enter quickly and bring the price down a bit more in Friday after hours. A little more manipulation from behind. This is my division. Absolutely, you can see this based on the latest round of 13F. They are increasing their positions with big money in Q4. So that's relatively good. Although in Q4, you can see that the prices were relatively high compared to where they were. So again, if they're taking advantage, maybe from here downwards. But this makes it clear that big money is trusting SoFi, retail too. And it seems that retail investors are getting involved to a considerable extent. It appears since January 18th, and since then, both big money and retail have been buying, which often indicates something significant. This is commonly seen in scenarios where the stock price rises rapidly. Stochastic is at 28, so in that regard, it's somewhat neutral. And there's no consistent trend. And when it comes to some strong support and resistance points, as I've mentioned before, this pivot point there, $7.52, is SoFi defense. So, last Thursday and Friday, it bounced twice from S1, and then this week, I believe it bounced twice from this pivot point. And indeed, this was the reason for SoFi defense. I have no idea why it's so volatile today. Maybe people are just taking profits. The last moment of fear for SoFi, or maybe waiting for a usual SoFi post-earnings sell-off. Whatever the outcome, I really don't know. But I know that this pivot point is a golden opportunity. So $7.52. And about the next strong resistance points that you need to look at, 776, 792, and then 816. So I think a good rally is about to happen, powered from within and perhaps propelled up to 8s based on their earnings results, maybe even to 9s. So please share your thoughts in the comments below. With interest, I conducted a poll on Twitter, so I'm just going there for a minute. So I conducted a poll. There are very few votes right now. It was open only for 43 minutes. But I asked where you feel SoFi will be after earnings, and it seems somewhat evenly split. Many feel it will be over $10. A large part will be between 8 and 10, and then bears will be below 6. As I've mentioned before, we project a decline below $6, as indicated by Elliott Wave Technicals. So if it's below the pivot point of $8.69, we anticipate it to range between 536 and 590. So it's a wait-and-see scenario during the upcoming earnings. Hopefully, their earnings will be good overall. Please share your thoughts in the comments below. But let's talk about options. Calls worth $11 million have been bought compared to puts worth $6.53 million. So 46% of all options today are bearish. This is a peculiar scenario during earnings. However, those who bought call options seem to expect it to be above $9 towards the end of next week. This will overshadow the actual earnings, and as I mentioned, it's a significant portion. Right now, there's an open position of $69,000 at a strike price of $12. Someone, perhaps a wealthy individual, I don't know who, may be trying to push it higher. $69,000 is undoubtedly madness, so this might trigger a rapid gamma squeeze and a short squeeze if it happens. Who knows? Share your thoughts below. I'll talk in a minute. And again, I'll discuss how analysts anticipate rate cuts during 2024 and how this will affect the dynamics of SoFi and its business. These numbers seem to indicate that the Fed will be very pleased. These numbers are quite impressive, and the cooling of inflation through productivity growth couldn't be better. It's almost reminiscent of the boom of the 1990s. I believe the Fed will feel quite good about themselves. However, it has put itself in a position where it cannot lower rates in March. But I think when it starts to seriously consider rate cuts in its January meeting, then the situation might heat up by March, and instead of waiting until June, they might cut rates in May. You know, they have some people rotating into voting positions who already want rate cuts later. And I think that's the navigation. But for Chair Powell, controlling his intensity in the press conference will be difficult again. So yes, deciding the timing of rate cuts is somewhat tense. The market wants this to happen as soon as possible. If there's consensus at any point, especially with reference to the upcoming Federal Reserve meetings, that it might happen perhaps a year from now, I believe the stock market will decline because it's not something already factored into the market. However, I'm not a financial advisor, so I'd appreciate your thoughts on SoFi. Give yourself a shout out. In this regard, where do you think upcoming quarterly earnings will lead us? So please do share your thoughts with me. Thanks for joining Stock Analysis. Stay informed with our market insights. Hit subscribe for expert strategies, and let's navigate the stock world together. Happy investing!